Budget team in the economic survey tabled today with Raghuram Rajan, the chief economic advisor, saying that things are disappointing, but there are better days ahead.
Ahead of the budget, the economic survey painting a slightly optimistic view of the economy, saying the downturn is more or less over and that the economy is looking up. As far as the growth forecast for next year is concerned, the economic survey says that we will grow from the 5% levels this fiscal to well over 6%, pegging it at a wide range of between 6.1 to 6.7%.
We are batting on a sticky wicket, but the sun, reflecting our own strong underlying potential, will dry the pitch out.
But the chief economic advisor admits a lot more needs to be done. The slowdown has been a wake-up call to increase the pace of reforms, warning that food inflation will remain a concern. He talks of the need to slash subsidies and do much more to create jobs.
It is very important that, and FICCI has maintained this steadily over the last year, that projects which are stuck need to be resolved because they are a drain on the sector.
It appears it doesn't really generate any degree of confidence that this government is bent upon moving towards a more sustainable, more inclusive, higher growth trajectory.
So all eyes clearly now on Finance Minister P Chidambaram and the budget, the tough task ahead of him, trimming expenses, increasing revenues and bringing the fiscal house in order. Will he be able to do that at a time when you have your eye on elections and when growth has slowed to the lowest pace that we've seen in a decade? He, of course, will need to widen the tax base to bring in those additional revenues. The economic survey also arguing against increasing tax rates, instead saying we need to widen the tax base. Shrinking wasteful subsidies is something again that will have to be done, especially in the case of fuel subsidies where we need to move towards aligning them to market rates. But most importantly, restoring investor confidence that has clearly taken a huge beating in the last few months. So we'll have to watch out for what the finance minister finally does. Will he take care of the needs of voters or those of investors? That's something we need to watch out for.
Well, and to try to crystal ball gaze on the eve of that budget and the reaction to the economic survey, joining me tonight is NK Singh, former Revenue Secretary and with the Janata Dal United now. I'm also joined by Naina Lal Kidwai, President of FICCI, Kiran Mazumdar-Shaw, Chairperson of Biocon Limited, and Professor Jyothi Ghosh of the Jawaharlal Nehru University. Mr. NK Singh, so we've heard the Chief Economic Advisor say India is in a difficult but not impossible situation. He admits that we're on a sticky wicket, but he says the sun can dry the pitch. Optimistic there on the eve of a union budget, which is being looked at really as whether Chidonomics will work versus welfare economics.
Well, I think that I agree with the Chief Economic Advisor's analysis. I think that the hand of Raghuram Rajan is pretty evident in this economic survey in Chapter 1 and Chapter 2. And I think that he recognizes quite candidly that India is in a difficult spot, but he also mentions the initiatives which are underway. So to some extent, it lowers the threshold of expectations which we should expect from tomorrow's budget, because in the backdrop of all these uncertainties, a global slowdown, a difficult domestic situation, I think that one should have not really euphoric expectations, but I think Chidambaram will deliver on what he has promised to deliver, a responsible budget, a budget which I think will further initiate the process of economic revival. And I think the contours and outline of that is pretty evident in Chapter 1 and Chapter 2 of the economic survey, which outlines both the macroeconomic strategy and in terms of the policy prognosis which lies ahead of us.
Naina Lal Kidwai, you said that you agree with the economic advisor and you said there are green shoots on the horizon. So cautiously optimistic there. You say they can be seen, but they could be seen. But let's see what actually happens tomorrow. What are your expectations of this budget? Because so far what's interesting politically is that Mr. Chidambaram seems to have the full backing of the Prime Minister, despite facing some opposition from ministers who say, look, don't cut budgets on issues of like defense, on welfare spending, etc. Do you think Mr. Chidambaram is the one man who has the guts to push this through in a way?
I think, Sonia, the good thing is that the containment of the fisc was in fact high on the agenda almost 3 to 4 months ago. Measures taken there have yielded results. In that you saw the way the stock markets rallied when the first moves happened on removing of the oil subsidy. So directionally, it's already through a process of trial demonstrated that that is the right way, and that is what has caused the return of optimism. It's a little bit of reform here and there on FDI and so on, but the real big movers are the attempt by the government to rein in the fisc and to begin to also look at inflation with a view to bringing interest rates down. I think what I take heart from the economic survey is that growth is central in that survey. The talk of return of economic and manufacturing growth, jobs, tells me that whether it's the service sector or the manufacturing sector, there are no risks going to be taken with anything that tampers the growth sentiment. And to the extent that there are some green shoots, and they're very, very tiny little ones that need nurturing, it would surprise me if there were any measures that came in that hurt that, and this very, very nascent new optimism and sentiment that has come into the stock markets as well. We need buoyant stock markets for the disinvestment calendar this year, and the government has a large disinvestment calendar, and tinkering at the margin with anything which hurts that, and I think putting taxes back on, whether for the wealthy or others, would be that tinkering, because it would not yield much money. But what it would do is to hurt sentiment, and in the long run hurt us as a country as we go to disinvest in markets that don't reflect the sort of mood and optimism as we're seeing today. So it's going to be important to maintain that buoyancy.
Yes.
And the Finance Minister has shown how he feels it is important. His roadshows went down extremely well, and we have to now carry forward that agenda. But it's a tough balancing act.